The theme today is the future of sustainable business. And so there's a lot of people out there with some really amazing ideas for businesses. And sometimes those businesses require some capital to get them started. So I'm excited to introduce our next speaker, Meir Rabkin, the founder and managing partner of Blue Vision Capital. Let's give it up for Meir for being here today. There we go. Take it away.
All right. Good morning, everyone. Great to be here today. Thank you, Dylan, and the whole EarthX for having me. It's a great honor. Today, I'm going to talk about navigating and thriving in climate investing today. And what if I told you that now is actually one of the best times, the biggest economic opportunities to invest in climate? May sound contrarian, but you'll see hopefully by the end of today's presentation how to navigate and how to thrive. So just a bit about myself. I'm the founder and managing partner of Blue Vision Capital. It's a venture capital climate tech VC fund that I launched a couple of years ago, focusing on seed and Series A startups. And so naturally, as an investor in climate, we're all scratching our heads here saying, okay, what's going on? We've noticed that there's been some subtle changes in Washington with regards to climate policy, right? So what do we make of all that? Let's see if I could turn it. Okay, cool. And so, yeah, obviously I'm joking when I say subtle. Actually, we're seeing some of the biggest changes in climate regulation, I think, in history. But some of the notable ones are the 31 actions to essentially deregulate EPA, the Energy Protection Act. So on March 12th, an Environmental Protection Agency Administrator, Lee Zeldin, not to be confused with Led Zeppelin. I know it sounds similar. But Lee Zeldin announced 31 actions aimed at rolling back a number of significant environmental regulations, what the agency calls actually the most consequential day of deregulation in U.S. history. So the list of targets includes reconsidering restrictions on carbon dioxide emissions from power plants to rolling back vehicle emission standards. So that's definitely been a big piece. The second one is more logging in national forest. It's pretty interesting, but on March 1st, the president signed an executive order to increase timber production across 280 acres of national forests. So logging, as you know, drastically impacts a region's biodiversity. Withdrawing from the Paris Accords, banning paper straws, pausing electrical vehicle adoption. Let's not forget, 28% of emissions in the US come from transport. And then NOA staff cuts, which I know hit home for some of the people in the crowd today, aka Ellen. So what do we do with all this, right? And so as a climate investor, you look at this and you say, should I be considering a career change? Does it still make sense to be investing in this space? And when digging a little bit deeper, we actually notice that it's actually not nearly as bad as we think it is. And there is actually tremendous opportunities when you look at it from a global scale. And actually last year, we actually saw some pretty, I'd say, record-breaking statistics around climate investing. So in 2024, 92% of new power capacity worldwide was from renewable energy, including in the United States. So we're actually seeing that for the first time, 36% of global energy production is renewable. We've never seen that before. So the CO2 intensity of global power is actually 12% lower today than it was in 2007. So we're doing fantastic progress. Another interesting data set is that electric cars, EVs, are now below $10,000. So it's actually cheaper to buy an EV than a regular combustion car, making it quite appealing. So reminds me a lot of how the solar power was undercut because it became the cheapest source of energy. So global energy transition investments exceeded $2 trillion last year. The momentum is strong and it continues to push. We've seen 20% year over year energy transition investments. So as a climate investor, when I look at this, it kind of cuts through the whole noise that we're seeing in the media around how climate investing is closing its door. We think differently. But of course, one has to navigate very carefully. And there's a lot of pitfalls that one should avoid. There's a lot of areas within climate that one should be very careful with. But we really highlighted 4 main areas that we think are really interesting right now that are very much aligned with macroeconomic tailwinds. And the first one is anything around AI and data-driven energy optimization. Quick plug there, but I was listening to Ellen's podcast this morning around AI, which was really cool. Because it's, I always thought about it as there's a lot of climate applications to AI, but I learned something new, which is there's also applications to new materials. like how do you extract lithium and how do you extract like different ways of making things that we didn't even know was possible. So you'll owe me a drink for that plug. But the second one is anything around automation and Industry 4.0. You know, with the tariffs that we're seeing, it's putting a lot of pressure on a lot of industries. So how do you make them more lean, more efficient? How do you automate it? So we do think that that could be a big catalyst for anything around the industrial transformation. And there's a lot of climate and sustainability applications there too. And then the last is really investing in climate solutions that cross political lines, meaning climate technologies that are not red or not blue, what we call, you know, purple startups. One example is wildfire mitigation. I'll get into that. It's a company we recently invested in around using AI to fight wildfires. And they're doing really well with both administrations. One thing we would avoid, though, is anything that's policy heavy in terms of revenue models. So any B2G type of deal business that relies on government policy, that has heavy CapEx, heavy capital expenditures, that is something that is a thing of the past. We really need to prioritize unit economics, business fundamentals, solid businesses that could thrive in this environment. So I'll give you a couple of examples of what that means to add a little bit more color to the story. And this is a company that we recently invested in. It's a California-based business. It's a machine learning platform tool, really, that allows you to use satellite imagery and LiDAR to be able to detect what are areas that are most prone to wildfires. And so they map it out using their models, and it could essentially show you that today there's about 300 communities, Western communities, that have a 98th percentile of wildfire risk, such as the one at Altadena. And so obviously this is about protecting communities and protecting infrastructure. And so the way it works is that they use their satellite imagery and their LiDAR. They would scan an entire area. So their pricing model works like per acre of forestry. So Cal Fires or national parks would essentially hire the company and say, okay, I'd like you to scan the entire forest and let us know and map out where is it that areas that are most prone to wildfires. So you get the data, and that's great, right? And you get it in 3D high resolution to get into wildfire modeling. But once you have that data, what do you do with it, right? Okay, great. So now we know that there is an area that's in red that's prone to wildfires. What's the response? Because there's a lot of competition in the wildfire space, what's called fire tech. But the response is really, I think, what makes this business extremely unique. And that's really where their moat is, right? How do you do wildfire risk mitigation and treatment? And what's interesting here is that they've modeled out, what this shows you here is the treatment had done on before the Eaton fire in Los Angeles. And what you see here is had the company done the treatment and had the municipality listen to it, it would have actually protected the entire community. So it's a model that works. What essentially they do is that they could forecast the wildfire before it happens. And then once you have that forecast, you build a firewall, which essentially involves, you know, creating these perimeters of lanes where you chop off trees, right? And you do all sorts of different methodologies. And what's interesting here is that this would cost $9 million, okay, to do the wildfire treatment. But that $9 million would have avoided $40 billion in losses. So that's a really serious ROI, right? So this is something that hits home. And as a matter of fact, this is a business that is in discussions with the current administration. They're spending a lot of time in Washington because it's actually extremely aligned when you think about it. This is a lot more efficient than, you know, bureaucrats sitting at some office trying to use archaic ways to combat wildfire. This is the most cutting edge technology, saving billions of dollars. And in general, the second you say saving billions of dollars at the end of any sentence, you got, you know, Trump's attention. But it's saving $40 billion with you know, a 10x reduction in treatment. So they're a name now in Washington, and it's a climate tech startup, and they're thriving. And so I think that this is a great example of startups that could do extremely well in this environment. Another one that we're looking at is Industry 4.0, right? So we're building out these huge renewable energy infrastructures. And this is a business that is automating the construction process. So instead of using humans to go to the desert and build these massive solar panel fields, solar farms, this is a company that produces a robot that does it. And it does it 10 times quicker than what humans could do with a 70% margin improvement. So in a world where we have new tariffs, where businesses need to be more lean, where we need to produce quicker, businesses like these, I think, could really scale. I think there's a lot of macroeconomic tailwinds that could really push this. And this is a business that we believe is going to hit $1 billion in valuation. As I mentioned earlier, 90% of new energy production came from renewables. So in order to keep up with that pace, we're going to need a lot of automation, right? So anything around Industry 4.0, anything around automation, I think is going to do extremely well. And this is going to be integral to hit our climate targets. So that's another area that we're really focused on. And then the last area is around energy efficiency, right? And there is a lot of technology today on how you could essentially have a lot less energy consumption for data centers, for AI, using different types of materials, right? So we all know that the rise of data centers and AI is putting huge pressure on the grid. Energy demand is going to double over the next 10 years, and we simply just don't have enough energy to be able to meet this demand. And this is why businesses and technologies like these, which are going to be able to essentially cut the energy consumption by 4 times using what's called quantum effects, right? Using photonic quantum effects, is going to give new edge applications to energy consumption. So this is going to be, in my opinion, integral. So these are areas that, again, even in the current administration, businesses that are going to thrive, they're going to succeed. Because we're all energy hungry, we're starving for energy, and these are solutions that I think are very agnostic politically, but are very important. And so this is why at Blue Vision, when we look at the areas that we're focusing on, we've shifted a little bit of verticals. We had to, right? But today we're focusing on energy efficiency and low carbon technologies, as mentioned earlier, AI and data-driven climate solutions such as the Vibrant Planet deal, the wildfire prevention deal, and anything around industrial transformation and automation. And we really truly believe that there's tremendous opportunities in all of these areas. And the kicker here is that because climate investing has gotten such bad press, given everything we're seeing in the news, valuations have tumbled. So actually, it's an interesting statistic is that there's about 30 to 40% less climate deals that are done in the last, I'd say, 12 months or so. Valuations have been compressed. So this is an opportunity to get in at, in my opinion, really discounted multiples. So you're coming in at a great pricing point, but you're going into businesses that, in my opinion, are going to transform and revolutionize the future. So we couldn't be more excited. And, we're really all about investing in kind of the next frontier of climate innovation and acceleration. So I think that we've kind of figured it out. We put a lot of time brainstorming and shifting. Had we spoken a year ago, a year and a half ago, our verticals looked radically different, right? But I think in business, you need to learn how to pivot. You need to learn how to adapt. And that's the name of the game, not only for the startups that we back, but even for us as investors, right? So at Blue Vision, we're targeting a 3x return. We actually have a pretty nice team and a track record with 27 exits, 11 unicorns, and a pretty decent IRR. But I think the real way to win is by backing visionary founders that are reshaping industries. Industries are changing really quickly. An analogy as a Canadian that I love saying for hockey, actually it's Wayne Gretzky used to say it, but you got to move where the puck is moving, right? If you're going to be focusing where the puck is today, you're going to fail. But the puck is moving in a direction above and beyond what any of us can believe and imagine. So important to get there. So thank you very much, and happy to take on any questions. All right, let's do it. I don't even know how I was doing with time. But.
Here, let's grab a seat because we have some time. We had one of our speakers have to cancel last minute, so I literally was like, Meir, can you stay up there for an extra 15 minutes? So graciously, Meir said yes. So tell us a little bit about, your background and how you got involved in the finance and the venture capital world in the first place.
Yeah, sure. So I have a bit of, I'd say, the mic is on, yeah. So I have a bit of, I'd say, an unorthodox way in how I got into venture and into climate. So my career has been 20 years in the investment space. I started off in wealth management, worked in banking, worked for some really large institutional asset managers, and came to the realization that I wanted to do something with a higher purpose. I was quite concerned by what was happening around me on the environment front. I just wanted to make a difference, right? And so that's how my journey started. I had this aha moment when I met a climate tech VC a couple of years back. And sometimes in life, you come across inspiring people or inspiring projects, and you get that aha moment. So it became really clear to me at that moment when I met with them that this is what I wanted to do. This was going to be my calling. I'm going to leverage my access, my network of investors, of family offices, and I'm going to do something that I deeply care about, that excites me, and that's kind of how the journey started.
That's awesome. What I know you kind of worked in the private space. What was that transition like for you, working in that career role to starting up your own company?
Obviously, the learning curve was immense. It's radically different. I mean, the biggest change is, you're running the show, you're driving the business, so your mind is always on, 24/7. But it also, you could be creative with it. You could do whatever you like, and it's extremely stimulating, right? So you could really take whichever direction you want, and I think it's really empowering. Something that I didn't have when I worked in the private space or working for large firms. You're kind of you stay in your lane for the most part, and here I have the ability to really get as creative as needed and really be the driver of my destiny, which I think is really really neat. But of course, one thing I learned, it is a people's business. And one thing I will say for people that are looking to do a transition or a pivot, I didn't have a strong experience in venture, nor even in climate. And a lot of people, that could have been a reason for them not to do the jump, or a lot of people say, I'm not qualified enough. And what I've noticed is that if you have the right relationships with people, and you really, I'd say, convey your vision, they'll back you. Now, naturally, you need to have the right team surrounding you, etc. But I think that a vision could be, and the right execution could be a lot more powerful than qualifications, which are rather easy to hire.
Yeah, starting a business is not easy. Can you share a story of sort of that first big win that you can remember starting the company? And obviously it's a lot of work to get it up and running, and what was sort of that first aha moment, like, man, this is actually coming together, we're doing this? Can you share that story, that if anything comes to mind?
Yeah, so when I started talking about my idea to my network of investors, of even a few family offices, overall there was I'd say a high degree of enthusiasm. Now, mind you, this was in 2021. The world was very different back then. Climate was sexy and startup was hot. So there was almost FOMO back then, right? Where people said, if I don't back you, I might miss out. It was a bit euphoric. So I think the timing was interesting to start a VC. But certainly I was actually surprised, because I was going into these meetings and these conversations expecting a stronger pushback, and I was kind of surprised that some of them, not all, of course, a minority, but sufficient amount, hey, told me, I'll back you up. I'll write you a letter of recommendation. I'll sign you an LOI. And getting a few of those early wins for me were not only inspiring, but also encouraging and empowering to give me the momentum and the strength to push it to the finish line. So my first LOI was a $250,000 LOI from an investor, but also a good friend of mine. And another one was a former client of mine. So a lot of my former clients were doing that. And it started this way, and it ended with a $40 million venture capital fund a year and a half later. So it's a long journey, but it's certainly an exciting one.
Yeah, that's amazing. How has the conversation around investing in climate tech changed, kind of zooming out a little bit in the past, 10, 15 years, would you say?
Well, I think we need to recognize the fact that there is noise around climate investing, and there's even some PTSD around climate investing. The first wave was not a success. We all know that. Early investors, and even really prominent ones like John Doerr, right? One of the founders of so John Doerr, one of the first early investors in climate, lost money for a lot of his investors. And the first wave was not a success. The second wave was a little bit more sophisticated than that. The conversation has evolved a lot. And when I talk about climate investing, I make sure that I acknowledge the fact that it's a tough space, that we learned lessons from the first wave of climate investing, and that we're all about unit economics and business fundamentals. And that it's not about this fairy tale kind of, mission-oriented investment. But no, we're here to make money. We're here because this, in our opinion, is going to be $1 billion business. And that's, I think, the only way to win investors. And I also think that this is really the way to make climate investing more sustainable, because if you're not going to generate an ROI to your investors, it's not going to have an impact. You're not going to have repeat investors. You're not going to be able to build a successful franchise. So I think that the unit economics and the business fundamentals are key. And the more, kind of fairy tale type of approach to climate investing needs to go away.
Very cool. So last question. If you're a little bit new here today, earlier I asked, what is your pop bottle of champagne moment? So let's manifest it a little bit right now. What was your pop bottle of champagne moment that you want to accomplish here at EarthX?
Yeah. So we are launching our second strategy, our global strategy right now. So I started off with a regional fund. It was a great start, and now we're expanding. And so we are looking for new investors to back us on this journey. But we're also looking for innovative breakthrough startups. So phenomenal entrepreneurs that are trying to change the world in a very meaningful way. And so to me, if I could build a new network and meet new people, both on the startup founder side and on the investor side, that would be a magnum champagne to be popped.
What do we think, guys? Can we help Meir accomplish that this week? There we go. Meir, thank you so much for being here. Appreciate it. Sorry, my hand's kind of sweaty. But yeah, let's give it up for Meir. Meir's also going to be on our panel a little bit in this afternoon about sustainable investing. Super informative.